we can to ensure that we can all grow in our journey so far as trading is concerned, right? Now, the journey of trading is likewise to be as a child or a baby born, okay? So you won't just begin to walk. When a child is born, in the process of walking, you will have to sit on the floor. You crawl. You try your ways out and means to ensure you can even stand on your feet, which you may be falling with time. And then with time, you may stand on your feet, right? Now, when you stand on your feet, you won't be able to run at the moment, but you'll be taking a baby space running, right? Then at a point in time, you realize that you can fully run with speed. That's where we can say that now you are growing into becoming an adult, right? It simply means on the process of becoming an adult, you go through a lot of changes, a lot of processes, which in a way, because you've not been able to reach out to that particular destination, it may seems to be so challenging. So these are just few processes of life that from infancy to becoming an adult people go through, or we've been through such processes, right? So likewise on the journey of trading, you sign up, you don't know what is called trading. Maybe a friend shared with you due to maybe some financial constraints, or you've thought of it having a good dream, you love to achieve something great, and you've seen how people are making it in online, or maybe you are tired of your job, you feel like, oh, if I get maybe an online work to do, I guess that will help me, and you realize that trading is good. And even not just realizing trading is good, you realize that using RoyalQ Bot would simplify my journey and would minimize the stress of trading. So that very day you brace up with confidence and you started up with that journey, right? Maybe you might have activated just recent, yesterday, this morning, last week, last month, last 2 months, last 3 months, last year, and the journey is still not being easy for you. It's been up and down, or you don't even know how to analyze the face of the market. You don't even know how to set up your trade. You don't even know how to do your calculations. When signals is dropped on the platform, it becomes so challenging and confusing. You begin to ask yourself, what is this? How can I even set up this? Who will help me? These are various questions that we ask ourselves as beginners. Sometimes you see a chart and they said something is called candlesticks, and you don't even know what are candlesticks. Is it like the normal candle that we can light up, or what? Those ones are not sticks. So what is candlesticks? You see, you begin to ask yourself a lot of questions. They said there is something called analysis. You have to analyze the markets. Which markets are these people talking about? Even though they said trading, sometimes you join this industry with zero knowledge about trading, and you are also wanting to navigate your way out to ensure. The most important thing is, if I should be making money, well, that is good. Sometimes that is how we begin to think as beginners, and we suffer a lot trying our possible best to ensure things would work out for us. And sometimes it becomes so challenging that maybe there are other people to help you out. Maybe sometimes you need assistance, your upline, that is the person who even invited you, is not available to help you. Sometimes even the person who activated you even don't understand much about the trading, and he or she is also finding it so difficult to teach you the things that you are supposed to know. Even sometimes they find it so difficult to answer the necessary questions, or the questions that kills your doubts, right? And it becomes so confusing to you, Sometimes you even set up a trade and you realize that the thing is not delivering on time. But I thought the screenshot that I saw, I'm supposed to be making profits daily. So why is that I only set up a trade and the thing is not delivering? It's been 2 days now. Even sometimes you set up a trade and you think, oh, immediately I set up the trade is supposed to be delivered. And things are not, it is not working as it's supposed to be. Look, I set up a trade within 30 minutes and it is still there. What is happening to the trade? Sometimes you just look at the trade and you realize that it will be red, then it will turn to green. It will be red, then it will turn to green. Then your heart begins to beat. What is this? Is it like my money is going or what? And maybe sometimes you might be one of these streets guys or one of these guys who like betting and you've been betting. So you see your money going up and you'll be like, hey, is this thing going to take my money away? Is it like one of these betting things that I've been doing? You question yourself a lot about so many things in the market because you are a beginner. You see, so you begin to ponder on a lot of things. Sometimes you don't even get answers. You'll be there, they will add you to a group. They said, oh, this group is good. Join this group, they will provide signals for you. You'll be there, someone will tell you, oh, I'm the best trader in the world. I am one of the highest rank of traders in the world. I've been teaching trading for so many years. I taught King Charles, I taught Donald Trump how to trade, so I can sponsor you to start trading. Then you feel so excited. I've met the person who taught Donald Trump how to trade. So he's going to teach me how to trade. Then the next morning you wake up, the person says, send me money. The next day you wake up, the person said, I want to do this for you. I want to do that. The following day you realize your account has been wiped out. Then you begin to ask yourself a lot of questions. What at all is this trading thing about? Something that we all just joined to make money. And now things are becoming so complicated. Who is there to answer all my doubts, answer all my questions for me, clear all my doubts? And it's become so challenging, right? Now, I got to realize that on the journey of becoming, a lot of things happen, right? On the journey of what? Of becoming. On the journey of what? Becoming, a lot of things happen. And sometimes, some of these things happen for our own good. Sometimes too, some of them happens because of ignorance. And in as much as we are human beings, we are bound to make mistakes. Maybe unclear decisions can end up making us to decide on something so bad. But this morning, I believe by the time we leave here, I'm just going to take time, going at a slow pace. We vibe here, we learn here, we discuss here, we grow here before we depart from this session. Right. So, something came across, something came in mind, and the trader asked, he said, when I sign up my RoyalQ, what are the expected lessons that I should start with? Or what are the lessons I'll go through? So I realized that no, this person wants to take his journey to another level. Because mostly when traders begin to sign up, the next question that they ask is, how much am I going to make? Who is sharing the screen? Oh, my paddy, why will you do that? Uh Hold on. Hmm? All right, okay. Okay. All right. Let's proceed. So you see, there are a lot of doubtful questions that you will begin to ask and you don't get answers to them. And I believe they are all part of the process of what growing. But the most important thing is that as you join, there are things that we call the basics of trading. The basics of what of trading, that at least it is important for you to understand, learn them, and then grow with time. Yes, of course, you may make mistakes, but the most important thing is for you to understand how to handle the skills. The most important thing is for you to do it, understand how to do it, how to handle the skills. So I believe, let me start sharing my screen. So this morning, what we are going to do, we are going to start from the scratch, right from the onset of trade settings. So the middle part or the ending part of all kinds of things you need to know so far as a beginner is concerned, or so far as you're a beginner. So let me share my screen. Let me share my screen. Okay. All right. So I have my screen shared. I have my screen shared. Now, sometimes even there are some of you or there are beginners that they only join or you only join because you heard that RoyalQ can be giving you daily earnings. Daily earnings. That is the main reason why you joined, right? You heard that RoyalQ can be giving you daily earnings. So let me start from this pace, which simply means the common idea or the real idea about RoyalQ has not been, you've not bought it yet. You've not bought or you've not buy the idea of understanding RoyalQ in the first place, right? Now, one thing that I would make it clear, so far as this class is for beginners, and you need to clear a lot of doubts before you can grow. You see, if you really want to grow, you can never grow with doubts, right? You can never do it, you can never grow with doubts, which simply means if you mean to grow, you need to first understand certain things, and after understanding them, they clear your doubts. So in the first place, the idea, maybe RoyalQ, you are expecting that at least as for me, I should be earning daily, and if I earn daily, it will help me. So sometimes you set up a trade, and if you are not getting, if the trade is not being sold, you get so frustrated, and you ask yourself, but people are earning every day. Why am I not earning every day? One reason that RoyalQ has been so genuine and it's different from all forms of platform is that RoyalQ, the bot, I call it a tool. Trading tool. So view RoyalQ as a trading tool. Now, trading exists. Trading is real. But there are certain things that for you to be a good trader, you will need them to assist you in your trading journey. That we may call them tools. Okay, there are certain tools you will need in order to grow in your trading journey. And that is what makes it so difficult for mostly what we term them as manual traders. Manual traders to grasp the concept of what? Of trading fully. So RoyalQ is a trading tool, and when I say it's a trading tool, what I mean is that the bots have inbuilt strategies, inbuilt what? Trading strategies. The bots have inbuilt trading strategies, which simplifies trading. That is the reason why it's a trading tool, right? The bots have inbuilt trading strategies, which simplifies what's trading. So under normal circumstance, if you are a trader, your first idea or the first decision that you make is to set up a trade. We set up a trade as traders. Now, if you set up a trade, your next decision is to be monitoring this trade over time. The next part is that after monitoring, when the profit is too satisfied on your behalf, you close the trade. You close the what? The trade. Which simply means every blink of staying away online, a little blink of staying away off your device or away from your system, it may cause maybe damage to you. Since you wouldn't always be there to control things, right? Since you wouldn't always be here to control things, it will be a damage on your behalf. So in the case of RoyalQ, the tool is such that now if I'm able to set up a trade, I can leave or hand over the rest of the process to the bot to take over. Do you get it? I can hand over the rest of the process to the bot to take over. That is the first idea. Any other thing becomes minor. So I have the process. So after setting up a trade, the rest of the process becomes what can only work based on strategies. So trading is based on what strategies. The strategies that involve in trading is what makes it trading, not just the setting up of the trade. Now you need a strategy to set up a trade, but after this setup, it is the strategy that is going to ensure things will work out right from here till you make your profits, right? It is the strategy that will ensure that things will work out after setting up a trade till you do make your profit. That is the reason why we are saying RoyalQ is a trading tool, because the tool there has been designed, or the system has been designed to ensure that traders can be able to use those inbuilt strategies, those inbuilt tools involved in it to be making trading decisions easier, right? That is the first thing, which simply means RoyalQ in an essence is not an investment platform. Do you get it? Which simply means RoyalQ in an essence is not what? Is not an investment platform. So immediately you sign up, maybe you first got that idea of I have to be earning daily. I have to be earning daily. Now, once I understand that the bot is there to trade or to help me or to assist me in my trading, it simply means I am facing the market, the real market, right? With my what? With my bot. I am facing the real market with my bot, which simply means my earnings are subjected to one, market conditions. Market what? Market conditions. My earnings are subjected to market conditions. And when we say market conditions, the crypto market in general and every market in general possess a lot of conditions or factors which contribute to profit making, and also fast profit making and slow profit making, as well as losses. So fast profit making, slow profit making, and then also losses. These three things in the market is subjected to what we call market conditions. So it is a market condition, it is a condition, a factor that may influence your fast profit making, slow profit making, and then also losses as well. Now let me know if someone is following, because I guess I have to take time to for us to learn. Let me know. Give me one in the chat if it's taken. Hmm? Let me know if it's taken. Let me know if it's taken. Is it going through? Is it going through? Very good. All right. Thank you. Let's proceed. Right? So over here, this profit may be subjected, your profit making may be subjected to market conditions like your fast profit, your slow profit, your losses may all be subjected to this condition. Now, why did I add losses to it? Because RoyalQ bots trade on spots, which I'll take time to explain what we mean by that, and then also on futures. On spots and then on what? On futures. So these two different markets, or these markets are two different markets. We have the spots and then the futures. So that is the reason why I've added the losses to it. So I'll get back to explain why losses are also involved. Right? So the main work of the bot is to add up those tools to enhance or make the trading to be so easier and less complicated to the trader, right? Because trading in itself is complicated. Trading in itself is complicated. So if I don't get assistance, things will be even more complicated than ever. Things will be more complicated than ever. So the bot is there to serve as an assistance to you, the trader or the beginner, right? So RoyalQ is not only for beginners, it's not only for beginners, right? It's also for pro traders. Pro traders. Now, why is it for pro traders too? So on the aspect of beginners, I've explained one as a tool. Now, on aspect of pro traders, listen. If you are a pro trader, what makes it so interesting here is that you already have trading knowledge. You already have what? Trading knowledge. So yours is to apply the knowledge you have in trading, because the bot is less to do or to use in terms of knowledge. So apply those knowledge in trading to the bot so that you can maximize profits. That is the first thing. You can use the bot to maximize profits, right? So as a pro trader, just becomes so easy because you are using the bot to maximize what? Profits. Now the next thing is, as a pro trader, you get the opportunity to use the bot as a product to train your traders. As a product to do what? To train your traders. This is what makes it so interesting when you become when you're a pro trader using the bot. You get the opportunity to maximize profits using the bot, and also please take control. Take control of that. Right? Let's proceed. So when you are a pro trader, it even makes things so easier for you because one, you maximize profit using the bot, and two, you get the opportunity to train your traders using the bot as a product. Because one thing that I know for sure is that if you become a pro trader, you always develop the habit of building community. Building what? Community. And you can never build a community without products in crypto. You can never build a community of traders without what? Without a product. So the bot now becomes your product. The bot now becomes your product. You now begin to use the bot as a product to train your traders, because you cannot just start trading without any products. Do you get it? That is the idea. So now
Hey guys, let's give Bro Emmanuel time to reconnect. Huh? Let me look for him. In the meantime, just be a little bit patient as we try to get him back online. Leader Doris, are you here? Can you hear me? Leader Doris? Okay, seems she can't either hear me. Let's give Bro Emmanuel some time. I'm trying to get him online, but just hold on, be patient. Yeah, there's no recording, there's no voice, but let's give him some time.
All right. Okay, so guys, hope I'm back here. Am I back here? If you can hear me, give me one in the chat. All right. Okay. Sorry, I guess some things are out of control. This network issue sometimes it becomes so challenging. All right. Okay. Thank you. Thank you for your patience. Let's proceed. Let's proceed. So let me share my screen. Sorry. Okay. All right. Okay. All right. So just as we are discussing now, after signing up, we talk about the setup, right? You are wanting to know how to set up your trade, how to go about it, especially you've seen signals and you begin to wonder how the signals work. Now, before you can be able to trade any signal, the first thing that you need to know is the type of signal you are trading. That is, the signal, is it dealing on the spot market? Hmm? Is it trading on the spot or the futures market? That is the first thing that you need to ask yourself. If the signal is trading is a spot signal, then you will now know how to navigate it. If it's a future signal, you will now decide on how to do what navigate it. Which simply means when a signal is dropped on a platform and you cannot figure it out, either it is spot or futures, you might mess up, right? If you can't spot it out to know either that signal is a spot signal or a future signal, you might end up doing what? Messing up. Right? Very good. So now when we talk of spot signal, briefly, let me um explain that. Uh, when we talk of spot trading, the idea of spot trading is simple, and that is the onset of RoyalQ. Most people have been familiar with spot trading for many years. Okay, and spot trading is all about you buy an asset. Okay, you buy assets at a lower price, then sell it at higher price. You buy the asset at a lower price, then you sell it at higher price. So on the spot market, it's just like any traditional market. Over here, we normally say that there are no losses. There are no losses on the spot market. So when we talk of no losses on the spot market, the reason why the losses are not involved is that you own the asset on the spot market. So in crypto, it's about ownership of an asset. Any asset you buy in crypto, you own it. Or you have a share, you own a share in it. Okay, you own a share of that particular asset, which simply means since cryptos are subjected to volatility, when you say volatility, that is it fluctuates. Okay, it fluctuates. So they rise and drop, they increases and decreases. That is the meaning of volatility, right? So since cryptos are subjected to volatility, we realize that if you are owning a particular asset, that is, if you bought a particular asset, the price can go up and the price can also come down. So when you buy the asset at a particular price and let's say you bought it at $2 and the original price decreased from $2 to maybe $0.5. In an actual sense, we will call it floating loss, which simply means the asset that you bought at $2 is now trading at $0.5, which means there have been a reduction of $1.5 from your account or from your funds. But the question is, do I run loss? The answer is no. Why? Because you've not sold the assets. The asset has not been what? Has not been sold yet. Immediately you sell these assets, mind you, immediately you sell these assets, you are going to run losses. Why? Because the original price was $2 and now it has reduced from $2 to 1.5, sorry, $0.5, which in an actual sense, a loss of 1.5 has been incurred so far. But this is not yet an original loss because the trade has not been sold, and there is a probability that this particular asset that you bought at $2 can still rise back to $2 or more, which simply means it will take you more time. It will take you what time to understand, or it will take you time to know that you have to get the profits. So if I want to make more profits on this particular asset that I bought at $2, then I have to exercise what you call patience. So that is where patience also becomes part of what trading. So now your actual name, which is Abigail, will now begin to change from Abigail to Patience, because you will need to exercise more patience to wait for these $2 to turn to $3, because now the original price, which was $2, is now at what, $0.5. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Very good. All right. So over here on the spot market, your profit making, one, depends on how good the market is. If the market is too good, when you say market is good, it simply means it is rising. That is on the spot market. The person writing should stop. That is on the spot market. When we say market is good, it simply means it is rising. And a rising market is what we term it as bullish. So add this one too in addition. A rising market is what we term it as what? As bullish. So you might hear people are saying the market is bullish. It simply means it is green, very green. Bullish, it is rising, right? Which simply means the market is good. So when the market is good, that asset you bought at, we said you buy low and sell high, right? On the spot market. So when the market is good, that asset you bought at $2 will turn from $2 to maybe $3 for you to make $1 profit. It will turn from $2 to $5 for you to make $3 profit. That is what we say the market is good. Now, when the market is bad, you see you bought the asset at $2 and you're expecting to make $1 profit. When the market is bad, a bad market on the spot market is called bearish. Listen, a bad market on the spot market is called bearish market, which simply means whatever you bought low will still go lower. Hmm? Will still go lower to the lowest point. So low, lower, lowest. The thing that you bought it at a lower price, at a low price, will now go to a lower price and now go to the lowest price. That is what we called the dip. The dip. So you bought it at $2. Now it dropped from, that is the low price was $2. Now it dropped from $2 to $1. That is the lower price. Now it dropped from $1 to $0.5, which is the lowest price so far. So before you can be able to make this profit, it simply means you have to wait for this 0.5 to rise back to $2 and more or beyond before you can do what you can make a profit. That is when we say the market is bad on the spot market, right? So on RoyalQ, you are capable of trading on the spot market and also on the futures market. So that is something small, something brief about the spot trading. So when you get signals, of which we'll talk about that. When you get signals, you have to know either it is spot signal or future signal. So on the spot signal, it focuses on one thing, right? On the spot signal, it focuses on one thing. Buying low, you buy at A, it will be sold at B. Which simply means if you are using the bot, when the asset is bought at point A, once it rises to this target B, it will be sold for you to make your profit. Either you are online or you are not online, to which that we know. Right? Now, in the case, this is where strategy comes in. This is where strategy comes in. In a case where I bought the assets In a case where I've bought the assets and still it is not rising, it may be going against me, or the market will be dropping. And since the market is dropping, it simply means it is going against me. So in this case, what I do is I need to get a good strategy. A good strategy. And one of the commonest of most of the strategies that we use here is what we call the dollar cost averaging, DCA, dollar cost averaging. And over here, what the dollar cost averaging does is that you bought the asset at A, you are expecting it to rise from this place to this point B, but the market has now decided to drop to this part, which is C. Then it's still dropping again to D, still dropping again to E. So before you can make your profit at point B, the market must reverse back from E, D, C to what? To A before B you will do what? You make your profit, right? Before you do what? You make your profit. So in a simple term, what the dollar cost averaging does is, instead of you to invest all your money at a go, because you know market is subjected to volatility, which is dropping at any time and rising at any time. So if I have $100 capital, the rule of the dollar cost averaging says, let me use $20 to buy at this point, 20, 20, 20, 20. Which simply means anytime the market goes at the lowest point, I will buy something small. Anytime the market goes to the lowest point, I'll buy something small. Anytime the market goes to the lowest point, I'll buy something small until the market reverses back. So you know, if I'm able to buy $20 at A, 20 at C, D, and then also E, when the market is rising, it will start from E before it will get to D. So on this $20, when the market reverses, rise back to D, I'll make profits on $20. When the market rise back from D to C, I'll make profit on this. So this trade 2020 will be sold in the market for me to make it as profit. Then D to C, it will also be sold. So 20, $60. I'll make profits at least on this $60. Then it will rise back again to this $20. Now profits of $80 before it will reverse back to the point B, which will bring me the general profit. That is the dollar cost averaging, which simply means while the trade is in the market and the entire trade has not been sold, I can still access opportunity to be making profits until the original trade is sold out of the market. If you get that part, give me one in the chat for me to know if you get that part. That is for spot trading. If you get that part, give me one in the chat for me to know if you get it. Let me know. Give me one in the chat for me to know if you get it clearly. Give me one in the chat for me to know if you get it clearly. All right. All right. That is good. Now, let's proceed. Very good. Let's proceed. So over here, that is something brief about the sports trading. And it's so interesting, especially when the market is so good. It's so interesting when the market is good enough, right? But sometimes it becomes boring as well because your profit making may be slow, especially when the market is what is low. When the market is not moving, it becomes so boring to you, the trader, which is also part of trading because boring is part of the market because the markets may not always be too good. Do you get it? The market may not always be what be too good to you. So it may also become boring. Of course, it's part because so you have to understand that you wouldn't be making profits every day. You wouldn't be making profit what every day. Your profit making may depend on how good or the nature of the market. Now, what about the futures market? Futures market. The futures. so that we talk about the signals, and then we talk about market analysis as well. Then I'll give you the opportunity. Don't run away. Don't run. Wait. If you have time, wait. Let's learn, because we're going to learn a lot of things this morning as beginners, right? So on the futures market is very different from the spot market. Now, what makes it so different? The futures market, you see, on the spot market, one thing is, because you own the assets, unless if the assets rise, you make a profit. If it drops, you wait. But on the futures market, it is called contract market. Contracts. Okay. So you sign a contract with the exchange. You sign a contract with the what? With the exchange. Like maybe Binance. Binance, OKX, as we know, right? I'm sure at least for those ones you know. So you sign a contract with such exchanges to do what? To make profits. And how do you make the profits from the exchange? The exchange borrows you money. They borrow you money to do what? To trade. Based on what we call leverage. Leverage. They borrows you money based on what we call leverage. Now, the rule of the leverage is simple. The rule of the leverage says, choose your capital. Choose your capital and sign a contract. Choose your capital and sign a contract. Now, win the contracts and make more profit. Lose the contracts and pay with your capital. Let me repeat. The rule is simple. It said, choose your capital or select a capital. Sign a contract. After selecting your capital, so you say select your capital, decide on the capital you want to use. Then decide on the amount you want to borrow. So if you have $10, decide on the amount you want to borrow in addition to the $10. So that is the contract. So if I have $10, I can decide to sign a contract of $100. Now, if I make profits, I go away with my capital plus the profit. If I lose the contract, they take back my capital. Do you get it? The contract is simple on the futures market. Listen, the contract is simple. Choose a capital or decide on a capital, borrow money in addition to your capital. Borrow money in addition to your capital. Trade to win or lose the contract and pay with your capital. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Let me know if you understand that language. Give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Let me know if you understand. Let me know if you understand. Very good. Very good. Very good. All right. Good. Let's proceed. Which simply means on the futures market, you can make profits with less capital, right? You can do what? You can make profits with less capital. And also, when you incur losses there, you have to be ready to pay with your capital. That is the futures trading. So let's assume I have $10. I have 10 USDT. I can sign up a contract of 10 or $100, which simply means the leverage is a multiple. So we have what we call 1x 2x, 3x, 5x, up to 20x. Okay, and even more. But on RoyalQ, we use up to 20x. So which simply means that the x simply means 1 times of your capital, 1 times of your or multiple of your capital. So let's say 10, 10, 10, 10, 10, which is going to give me how much? This is going to give me 200. This is going to give me how much? 100. 50, right? This is going to give me how much? 30. This is going to give me how much? 20. This is going to give me how much? 10. Which simply means with my $10, if I borrow or if I go for 1x, which simply means I'm borrowing $1, which is still going to give me $10. If I go for 2x, it simply means I want 2 times of my capital to trade, which is going to give me $20. If I go for 3x, it simply means I want 3 times of my capital, which is going to give me $30. If I go for 5x, it simply means I want 5 times of my capital, which is going to give me $50. If I choose 20x, it simply means I want 20 times of my capital, which is going to give me $200. That is the leverage. So over here, if I go for 20x, it simply means my actual capital is $10 and I'm going to trade with $200. 200 what? Dollars. Right? Now what happens is that if I'm trading with $200. So let's assume I go for a take profit of maybe 5%. Take profit of maybe 5%. Okay. This 5% simply means I'm expected to make profit 5% of $200. If I'm able to make this 5% on the $200, it will add up to my capital. I go my way. It will add up to my capital. I do what? I go my way. Now, if it happens that I'm not able to make this 5% and I couldn't win because we know the market drops, it rises and drops. So if the market drops against me, I'll pay with this $10 that I started with. That is my actual capital. So my actual capital will be used to pay for the loan of $200 I took. My actual capital will be used to pay for the $200 I took, which the bankers call it liquidation. Your money will be liquidated. So the bankers call it what? Liquidation. So in banking sector, when you go, you might be familiar or you might be hearing the word liquidation. They will liquidate your collateral. Your collateral can be liquidated at the bank. So it simply means this $10 was served as collateral. So when I can no longer serve the purpose of the contract, this $10 will be taken away or will be liquidated. If you understand that, give me one in the chat. How can it be liquidated? So let me explain that. And mind you, I'm just giving the surface of futures trading. How can it be liquidated? Before a trade can be liquidated, listen. So give me one in the chat if you understand that aspect. Give me one in the chat if you understand that. Now I'm taking time because I've understood that this session is for beginners, right? If you understand that, give me one. Give me one. Very good. All right. Good. Now, what happened before you'll be liquidated? What happened? This is it. Before the trade considered you being liquidated, you sign up with a contract. And these are the terms of the contracts. These are the terms of the contracts. These are the terms of the contract. Let's look at it. The terms are simple because markets on the futures market, we said on the spot market at point A, you expect the price to go to B. If not B, then it will drop to C. From C, it will still drop to B, then from D, then from D to drop to E before it will reverse back. So your profit making depends on the reversal. Okay, your profit making depends on the what? On the reversal. But on the futures market, it's not like that. On the futures market, a trader can make profits both on market reversal and um, trend reversal, and then also trend um, direction. So in every direction of the market, the trader can make profits, and how it works. It's either you go on long or you go or not on short. So we all know that the market can rise and the market can also drop. Hmm? The market can rise and the market can also drop. So when the market is rising, the trader can long the market, which simply means the trader is analyzing, just like the spot, you predicted that the asset will rise. That is the reason why you bought it. You bought to expect it to rise, right? So on the futures market too, the trader expects the price to rise, so you longed the asset. Now, on the drop too, the trader expects the price to drop further, so he can short the asset. Which simply means if I long the asset, I am expecting the price to rise. And otherwise, if the price is dropping, now my expectation is for the asset to rise. Now, when it happens that the price is dropping, when the price is dropping, it simply the market is going against my direction. I didn't choose, or I'm not expecting the price to drop. I am expecting it to rise. So unlike the spot market where you have to wait, on the futures market, they will give you a limited price. Okay, so they will tell you that, okay, since you are longing, if the asset drops to, let's assume the price of the assets, let's use maybe an asset called ton. Okay, assume you don't know ton, so the price is called ton. Just assume you don't know ton. Eh? So the price is what? The price of ton is $2. Let's assume it's $2. Now, if you go on long, it simply means you have predicted the price to go beyond $2. So if I set up a trade on the futures market, they will give me a limited price. They will tell you when the price dropped to maybe $0.5, your trade will be liquidated, which simply means this $10 will be taken away once the price drops to $2, 0.5 from $2 to $0.5. Your trade will stop. Unlike the spot market where when it gets to $0.5, you have to wait till it reverses back. Over here, when it gets to $0.5 and yet you don't have more money in the market, this $10 that you've exposed to the market would be taken away from the account automatic. That simply means it has been liquidated because the $10 is serving as what? As collateral. So since it's serving as collateral, it will be taken away from you. It no longer belongs to you. So you see, when I'm on long on the futures market, a minimum price drop has been given to me that is from $2 to $0.5. So when the asset dropped from $2 to $0.5, they said automatically I will be liquidated. That is the idea of the futures market. In the same manner, if I am also expecting the price to drop, so let's assume the price of ton is $0.5. The price of ton is what? Is $0.5. Now, I am expecting the price of ton to drop further. So ton is 0.5, 0.5. And I am expecting the price to drop further to maybe 0.2. So I've short the assets. Okay, I've short the assets. Now, when the price increases, maybe they can give me. Now, when the price gets to $2, we will take the $10 out of your control or out of your account, which simply means when the price refuses to drop, since I am expecting it to drop, when it refuses to drop and it begins to rise, it will rise. I don't have problem. It will rise. I don't have problem. Until it gets to these $2. Immediately it gets to $2, the actual $10 will be taken away from me, because that is the terms of the contract. That is the terms of the contract. So it's two things. It's either when the market is rising or going against me, which is from this 0.5, instead of it to get to 0.2, it is going to $2. I have to make sure I have more money. If I have more money, I can control things. That is where the strategy also comes in. That is the dollar cost averaging. That is where it comes in. So if it's going against me, I'll be able to buy. I'll be buying, 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 buying until it buy $2. Then it will still be what proceeding. But if I don't have any money and all the funds I have is this $10, immediately it gets to this $2, the $10 will be taken away, which simply means they have to liquidate me, or liquidation will do what would happen. If you understand that, give me one in the chat. If you understand that part, give me one in the chat for me to know if you understand. If you understand that part, give me one in the chat for me to know. If you understand that part, give me one in the chat. If you understand that part, give me one in the chat for me to know if you understand. If you understand, give me one in the chat for me to know you understand. Very good. Very good. Now, the next thing is, now that you understand both the spot, you've got fundamentals about the spot and then the futures. Let's look at it. So, over here, you will need signals to trade. Over here, you will need signals to trade. And how do you get the signals? How do you get? There are two ways you can get a signal to trade. And when we talk of signal, what is it? So, basically, when we talk of signal, okay, when we talk of signal, let's look at it. Signal. So you can also choose to term it as alert. Alert. So basically in trading, when we talk of signal, that is analysis that a trader has done. Okay. So let's say Bitcoin. Okay, BTC. Now, the analysis is simple. I've made enquiries to know BTC, the price of BTC will go up. Or I've made enquiries to know that the price of BTC will go down. These are the analysis we are talking about. So if I know BTC will go down and I tell people that they should go and buy BTC, that simply means I've given them signal. I've alerted them about the direction of what? Of BTC, about the focus of BTC. That is the meaning of signal. If I know BTC will go down and I inform people, the informing is what we term it as signaling. You are signaling the people. Signal. So I give you a signal that this is what is going to happen in the market. So based on the enquiries or the analysis that I did, you inquire, you analyze that BTC will go up or it will do what? It will go down. Now, both on the spot and on the futures market, we analyze and we get signals. So if I tell people that BTC will rise, so people should go and buy more, I've given them signal. If I tell them that BTC will drop, so people should go and short the market, I've given them what? Signal. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat for me to know. If you understand, give me one in the chat for me to know you understand. Give me one in the chat for me to know you do understand. Let's go. Give me one for me to know you do understand what we are talking about here. Let me see. All right. Very good. That is awesome. That is awesome. Very good. Very good. You are following very clearly. Now, the question is, how do you get a signal? So, you can get a signal by taking your time. Yes, you have a lot of questions. So, I said this is one-on-one. Okay, this is a one-on-one lesson. So, I'm handling this session as one-on-one session. Whilst I take time to explain this to you, I will also give you a time we will all discuss through as beginners in trading. Yes. So, now, how do you get the signals? So there are two ways of getting a signal. There are two ways of getting a signal, and I'll go in depth on both the two. One, either you follow an expert, okay? Either you follow experts, or two, you make personal analysis. Personal analysis. Analysis. Okay? There are two ways of getting a signal. Either you are following an expert. So you do as the expert says. So do as I say. Okay? So you are following the experts. So whatever the expert says, if the expert says, oh, the market is going to rise, so go and long, then you follow, you go and long. If the expert says the market is going to fall, go and short, then you short it. When the expert says, oh, the market, this asset is the best asset, so go and do it, then you do that. Or you do what you call personal analysis. So for someone to determine which one is the best coin, it's all about analysis. Now, how do we do the analysis? How do we do the analysis? So when it comes to analyzing, so mind you, at points in time, you may stop learning on the experts to start doing your personal analysis. So how do we do the personal analysis? There are so many ways of doing personal analysis. There are so many ways of doing personal analysis, and mostly it is categorized into three different sessions. One, a trader can do analysis in the market by using what you call technical, by applying technicalities, okay, technicals. And then two, by applying fundamentals, fundamentals. Or three, by applying sentiment, sentimental, by applying sentiment. So first, you may be familiar with technical analysis. This is how to determine the coin to trade. Fundamental analysis, that is also another way to determine coin to trade. And then sentimental analysis, it's also another way to determine coin to trade. So basically, when we talk of the technical analysis, it entails a lot of things. The technical analysis entails a lot of things. Now, with the technical analysis, sometimes it even go in depth so far to the extent that it even involve mathematics, right? Sometimes if it even goes so in depth to the extent that it even involve mathematics, right? So people use technical analysis to do what? To um analyze the market. And when it comes to technical analysis, we have what we call the candlesticks. Okay, candlesticks, what is chart patterns. Okay, so people can use the candlesticks to analyze the market, which is chart patterns. So chart patterns, um people can use indicators. Others too can use price reversal, what do we call price action, which also fall under chart patterns anyway. Price action. Others can use different strategies operated by different people by maybe smart money concepts. Others too can use what you called ICT. All these are technical ways of what analyzing the market. So mostly you may be familiar with indicators. And when we talk of the indicators are trading principles discovered by certain experts. Okay, trading principles discovered by certain experts based on sometimes mathematical algorithms or sometimes mathematical ways or modes. So the expert does a lot of research and he realized that when A is added to B, it moves the market to maybe uptrend. When B reverses back to C, the market goes downtrend. Do you get it? That is the meaning of indicators. So indicators follows what you call principles. With indicators, it's about principle that has been discovered by someone some years back in trading. So you are using the person's principle to make decision. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Okay, we still want to know about the long and the short. Okay, I'll answer all those questions. So by those ones, the indicator is simple. It's someone's principle. Okay, the person sat enough to discovered to realize that these are basic things he can do to steady the market. So the person studied the market for years and he realized that no, if this is added to this, the market does this, it does this, it does this, and this is what happens. So he propounded his theory of reading the market. And I believe you can also do that one day. I believe you can also do that one day. One day when you become so mad at the market and you studied a lot of things in the market, then you realize that oh, maybe until B, until Y, until Z. So there are a lot of technical indicators that we may come across with time. Okay, there are a lot of technical indicators that we may come across with time, and they are very common in trading both crypto and other forms of market. And the interesting part is that all these things, if you learn to understand them, you can trade in any part of the financial market, either stocks market, forex market, crypto, commodities, or whatever market it is, you may be able to trade. Right? Good. Now, the next thing, aside technical indicators that we talk about here, you can also see we talk about candlesticks. So the candlesticks is about reading how the candlesticks are formed. Different candlesticks, their meaning. When you see a very large candlestick, what it means. When you see a very lean candlestick, what it means. When you see a very small candlestick, maybe when you see double candlesticks together, what does it mean? So you study those candlesticks to read the markets. These are some of the ways to determine signals to trade. So these are the things that the experts have stated, and he does that to provide signals for you. Do you get it? These are the things he has stated to provide signals for you, right? Now, so that is for technical analysis. Now, the next thing is fundamental analysis. The next thing is fundamental analysis. Now, when we talk of the fundamental analysis, they are information the basic information about the market, about assets, and what have you. So the basic information someone inquire about the market or assets. So for instance, there are so many information that helps the market to go up or go down. Okay, there are so many information that help the market to either go up or go down. Sometimes some of them are economic news. Economic news. So you see, the market is a international market, and the people who invest in crypto and other things, we are all human beings living in different nations or different countries. So sometimes there are certain things that contribute to we bringing money in the market and certain things that contribute to we withdrawing money in the market. So for instance, if you are in Ghana and let's assume the Ghanaian president says that, okay, we are going to ban cryptocurrency in Ghana. All those Ghanaians using cryptocurrency will withdraw their money. Do you get it? So if I hear of this news that the Ghanaian president is banning cryptocurrencies, if I'm in Ghana and I don't withdraw my money, I may realize that things will be going so bad against me. So for instance, there are world superpowers who says and thoughts also manipulate the market, like US. So just imagine the US president Donald Trump gets down to say people should stop investing in cryptocurrencies. Now, what is going to happen? That one may form part of news. It's fundamental. Immediately he says that the market will begin to shake because a lot of people trust that man. They have their trust in him, and it will begin to shake the market. That is fundamental. So that news, that information that you heard happens to be what fundamentals. Do you get it? So for instance, today there is what we call FOMC. Okay, FOMC news that will be out today. Now, this FOMC meeting is organized by the Federal Reserve of US Federal Reserve, and they meet, I think, 4 times every 8 years. They meet 4 times every 8 years, and their last time to meet for the past 8 years is going to be this current today, and they are going to decide on a lot of things to either cut rates or not in the US. Now, this rate, if they cut, is going to help. If it happens that they don't cut too, it's also going to affect a lot of things. So that's news. If it happens that after the meeting they bring out good information, the market will begin to do what? Will rise. If it happens that that meeting brings out bad information, the market will drop. So that happens to be what? Fundamentals. If you understand that, to give me one in the chat. If you've understood that, give me one in the chat. If you've understood that, give me one in the chat for me to know if you've understood that. Very good. Very good. Which simply means today, whoever that is trading should be very careful because the market will respond to that news, being it good or bad. Do you get it? The market will respond to that news, being it good or what? Good or bad. So if I'm a beginner and I want to trade, I just have to take time and then be familiar with all these things. If I don't know, just imagine you enter into the market. Maybe you are trading on futures, you enter into the market, or you are trading on spots. You trade on BTC. Now, the time you realize after the news was broken, after the news has been broken, you realize that no, now the market is dropping. The market is dropping. BTC is now maybe 115,000. Now it is dropping from 115,000 to 80,000. Sorry, 8,000 or even 80,000. From 115 to 80,000 because of that news. When it happens that way, you will feel so bad. You wish like, oh, how I wish I known this very early. You get it? And in the same manner too, if you are trading on futures and you are on short, and this news happens to be so positive, the market will rise. And if care is not taken, you'll be liquidated. You'll be liquidated. So it will be so more important for you to wait, to see or to listen to the news, to read the news and see how it will impact the market, so that you can make more decision or good decision. Do you get it? And then the next part is what we call sentimental analysis. Sentimental. Now with sentimental, you study people's behavior. You study people's behavior, and then also you also study your personal behavior. Sometimes you feel so nervous about the market. You feel so nervous. Sometimes you feel so greed. And not only you, there are other traders too who also feel, sometimes they become so fearful of trading. Sometimes they develop greed. um They develop what? Greed. Their greed sentiment increases. So when we talk of sentimental analysis, it's about studying how people make decisions in the market by either being fearful or being greed. Now, what happens to people when they are afraid? When people are afraid, they panic to withdraw their money. They panic to sell or withdraw. And when people are greed, they invest more. So we have what we call fear and greed index. So you study people's sentiments, either they are fearful or they are being greedy about the market. That is market sentiment. So asking about how to get coins to trade, these are technical ways or these are professional ways of learning to get coins to trade. When you are a beginner, these are some of the things you need to know. So in a case where you cannot be able to maybe do all these things, or you are not well abreast with all this information, someone is providing signals for you. So that person becomes your analyst. So let's say, for instance, let's go on WhatsApp. We have some of our WhatsApp groups that signals are being provided all the time. We have signals are being provided all the time. So let's look at some of them. Okay, let me see. Okay, we have this one world. Okay, we have one world. So let's look at it. Very good. So on one world this morning, I guess, let's look at some of them. This is a signal group, right? This is a signal group. So over here, very good. You can see signals that were given. Some of them were yesterday, some of them to today. So let's look at yesterday's on. So for instance, this analyst, okay, this analyst, this analyst, let me clean here. So where is it? Oh, let me get back. Let me see. Uh, let me search for it. One word. Okay. Okay. Am I right typing the exact information? Wait, let me see. Just need one of the signals group to see. Okay, so we have this group here. Okay. All right. So let's look at this. Very good. So any of them. Now you can see now over here you can spot out to see that the analyst gave the name of the or the type of the signal. Oh, yes, let me unshare and then reshare again. Please, are you following? Are you following? Are you following? Are you following? Let me know if you're following. All right. Okay. That is good. So let's go. So one word. Right. Very good. So we have this signal here. Very good. Let me use any of them. So first, you realize that now this analyst gave this signal and he said, where is it? This is called spot signal. Can you see spot signal? So he indicated the name of the pairs. The trade is rare USDT. Rare USDT. That is, you are using USDT to trade against this particular asset. So you want to earn more of this in USDT. That is what it means. So anytime you see maybe BTC slash USDT, it simply means you have USDT and you want to earn more BTC in USDT. That is the meaning. That's just by the way. So he said the signal is what is current price. The entry price is what current price. When we say current price, it simply means if the price is $2, you are trading it exactly at $2. Don't let it go below or above $2. The take profit is 3%. It simply means you are expected to make 3% of rare on your capital. Okay. Then the strategy mode, which we will go into our RoyalQ to check, which is one shot. Strategy period is one shot, and then strategy mode is sub-in mode, real-time settlements. Now, the other part of it is, he said, do not trade after 2 minutes. Do not do what? Trade after 2 minutes. So you see, because he analyzed the signals himself and he knows what the signal can do, these are his instructions on how to go about it. He said, do not trade after 2 minutes. He said, use sub-in mode real-time settlement. The strategy period, he said it is one shot. The call drop, he said minus what? Not more than or not less than or equal to, it should be not less than or equal to what? 5%. Right? Very good. So you follow the instructions accordingly. Now we will look at it. Now the next one too, let's look at this one. You can see over here we have spots and futures. This simply means this particular signal can be traded both on the spot market and on the futures market simultaneously. So if I'm a trader and I see this signal, what the analyst is saying, I will go straight away to set it up on the futures and then also to set it up on the spots. Now the signal gave different targets. He said the full take profit is what is 13%. Wherefore, the first one, this is the first take profit, second take profit, third take profit, which simply means I can decide to enter on the first batch, second batch, or third batch. So if I want more than if so out of the 13% here, if I want to make all the 13%, I can enter this last one, which simply means I can make all the 13% profits. Or I can decide to enter part of this 13%, maybe the second one or the first one. So the total profit, when you add the first one, the second one, and the third one, you are expected to make 13%. I don't know if you get it. Now, he said, do not overtrade. If you are current on a trade and don't have extra funds, it is best to ignore the signals and focus on your running trade. Thanks. So, he has also given you his instructions. So, what he simply means is that I can trade this signal on the spot and I can also trade it on the futures. Now, on the futures, he has given you the direction. He said it is long. It is what? It is long. So these are some of the few things you always need to know whenever a signal is given. This time round, this particular signal is what is futures. So first, you check on top to know either it is future signal or it is what? It is spot signal. Either it is future signal or it is what? It is spot signal. Now, the next thing is over here, he has given you the leverage. He said use below 5x and above if it's you exceed not up to 10x. It simply means if you have $5 capital, if you have $5, don't exceed 10x. Don't borrow more than 10 times of your capital. So 5 times 10 is going to give you how much? 50. 50, right? So he is saying that don't borrow more than your capital. Don't borrow more than 10 times of your capital. Or if you borrow, let it be below. Start from maybe 5 times of your capital, but not more than 10 times of your capital. That is the leverage he has given you here, right? Okay. Now, so if you are a beginner, these are some of the things you need to be familiar with them before maybe I will enlarge to trade settings and other things. If we're a beginner, these are some of the few things you need to be so familiar with them that you wouldn't miss them to be a mistake on your side. So therefore, when the mistake will happen, or if the mistake will come, it wouldn't be on your side, but maybe it may be because the signal wasn't too accurate or the market happens not to follow the direction of the analyst or your analysis. Now, before I proceed to see how we can input those signals, let me give you the opportunity. Now, come in. Okay, so I'll start from the top. I saw a lot of questions. Okay, I'll start from the top. This time around, feel free to be here because this class is for beginners. We are all here to learn and learn better. Okay, so this is not for advanced traders. It's for beginners. Yes, so we are drinking water gradually. We are learning how to take a baby step. Okay, we are learning how to do or take a baby step. So please, but please, I'm having a lot of questions. Okay, so Sion, your name. So, okay, please, what determine the coin to trade on spot trading? Is it when the market is down or high? So I believe by now you've got the answer. So in this case, if I want to determine the coin to trade as a spot trader, there are two ways. But basically, when the coin is down, okay, that is when I can buy because we said on the spot market, we are buying low and then sell high. So we wouldn't like to wait for the price to go high before we will buy, right? So if I'm a spot trader, I have to monitor an asset. When the price is down, I buy so that when the price goes high, I sell. So Daniel, I believe you get it. So if I'm a spot trader, that is what I would do, or that is what I have to do as a spot trader, right? Okay. Now, please, what determine the coin to trade on spot? Okay, I guess. But the last long and short, so Amaka, Tracy, the last long and short, my network did not allow me to hear well. So if you have a recap, sir. All right, so basically, we said when we talk of long, when we say long, it simply means the trader is expecting the price to rise. So we have up and then down. So long simply means the price is up, or the trader is expecting the price to go up. That is long. And then short simply means the trader is expecting the price to go down. That is short, right? So when I go on short and the trade goes up, it simply means it is going against me. And when I am on long, which is I'm expecting the price to go up, and the price goes down, it simply means it's going to go what against me. That is the meaning of long and short. So Tracy, Amaka, I hope that is also clear. Okay, now let me see. So I'll still get down. Okay, so all those questions. So okay, so Tracy, I believe your question is answered. Now let me see. Okay, so please use that one that has TP. You did not say anything about CD. CD. Okay, so let's go there again. Let's go there and see. CD and then TP. So let's scroll through to see what Tracy is talking about. Mind you, this session is a collaborative session to learn. Okay, the core drop. So you are talking about the core drop, right? The CD. If I get you right, the CD, you are talking about the core drop, right? Yes. So in trading, when we talk of core drop, okay, when we talk of core drop, that is the percentage at which the asset can drop. So for instance, we said when we are on long, we are expecting the price to go up, but it can also drop, right? So over here, the core drop is the percentage at which the assets can drop. So if let's assume we started with ton, so let's assume we traded on ton, the price is $2, we're expecting it to go up, but it dropped from $2 to maybe $1. Between $1 and then between $2 to the drop of $1, maybe the percentage from 2 to 1 is 20%. Do you get it? So when the analyst is giving you the signal, he knows that this asset can, or he's expecting that this asset, though I'm expecting to go up, but it can also drop 20%. So the difference between these $2 to the $1 is the 20%. That is the percentage. So it's dropped from $2 to $1. So in total, between $2 to $1, it drops 20%. That is the meaning of the drop. So he is saying that it may drop not above, not less than 5%. So your drop shouldn't be less than 5%. So it simply means it should be more than 5%. So the analyst is expecting that the price of rare, even though it's what is a spot trading signal. Yes, it's spot. I guess it's spot, right? Let me see. Yes, it's spot. So even though the analyst is expecting the price to rise, but he knows that the price can also drop. So he's saying the drop that he's expecting would not be less than 5%. It can be more than 5%. That is what it means. Hope you get it clear. Tracy, hope you get it clear. Okay. So let's look at the next one. Okay, then use that one okay, so I guess you get it now. How do we determine exit price in future? How do we determine exit price in future? So if you analyze the coin yourself, if you analyze the signals yourself, you will be able to determine your exit price. If you analyze the signals yourself, you'll be able to determine your exit price. And sometimes too, when an analyst give the signal, you see, for instance, this particular signal indicated the entry price. Okay, he indicated the what? The entry price. So the exit price, listen, the exit price is your take profit. So over here, for instance, this becomes your exit price. So your take profits, it simply means you exited the market when the price gets to 3 or is it 30 points or 30.1900. So this becomes your exit price. When the price gets to 3.00, automatically you'll be exited out of the market. That is the exit. And then this is the entry. You are entering the market at this particular price. Right? Now, there is a difference between current price and then entry price. The slight difference is that an entry price can be a current price. Okay? An entry price can be a current price or a preset price or current price. So for instance, if this is the entry price, maybe you are entering the market will begin to work on your behalf, that is starting from 0.1670 or 0.1610. But if you see entry to be current price, it simply means you are trading the asset within the exact price of the market. You are not going to wait for this price to trigger. Do you get it? That is what we mean. So let's go back. Let me see the next question. Now, let me see. So last two questions are here. If before we proceed with any other thing. So do I have to divide my capital when trading, just like in futures, like I have 100 to just use $50? Okay, then let me see. Then explain more on the margin configuration settings. All right. Then if my margin call is off because of my insufficient balance, would the coin still sold for me when the price rise? So the answer is yes. So it's two things. If I'm on the spot market, listen, if I'm on the spot market and my margin, so I'll take your question first before I'll proceed with the other ones, because the rest I have to go to RoyalQ. So I'll do that. So if I am trading and then my margin calls goes off, my trade will still be sold. The margin call going off simply means, yes, I said I will answer because I have to go there. I have to go to RoyalQ for us to get the practical of it, right? So my margin cost goes off because I don't have more capital or more funds to buy the assets. That's the reason my margin cost went off. So I'll wait for the trade to be sold. I'll wait for the trade to be sold without any hesitation. Now, on futures market, when it goes off, you don't lose anything. You only lose when the liquidation price was triggered, because I said the price, if you are on long $2, then they will give you liquidation price of maybe $0.5. So you only lose when it gets to $0.5, which simply means if the margin cost goes off, you don't have any problem, right? Very good. Now let's proceed with from the onset. So do I have to divide my capital when trading, just like in futures, like I have $100? Yes. So it depends on the strategy you are using. That one, if so because you are a beginner, listen, it may not be too advisable for you to go in the market with all your money. So it is good to divide it into maybe 2 or 3 sessions so that you can go in the market with different capital or with parts of it. So you are not going to go in the market with all your capital. So you still look at that on RoyalQ, right? You still look at that. So if I have $100, should I trade with all the $100? If it depends, maybe you are greedy, you want more money, you can decide to trade with all the $100. But if you are not greedy enough and all your capital is $100, you can decide to divide it into 2 or 3. Then you use 1/4 of it to do it, to trade, whilst you reserve the 2/4 of it to wait for the market, or to wait for your trade to be sold out of the market. Okay. So then what is the function or meaning of margin call limit? What is the meaning of margin call limit? So over here, let's see RoyalQ. When we talk of margin call limits, okay, When we talk of margin call limits, call limits, call limits, margin call limits. So for instance, this is margin call limits, okay? Margin call limits. Now, when we talk of margin call limits, I've explained the drop to you already. That is percentage at which the assets can drop. So when we talk of the call limits, the portion of money that you reserve to buy, okay? Let's assume, like I said, you are not going to use all the capital. So let's assume I'm using $20 to trade, or I'm using $100 to trade. I've used $20. So this $20 that I've used becomes my FBA. Now, out of the $20, I still have $80. And I have decided that I'm going to use $80 as reserve to back up this $20. So I will decide on the number of times I want to be buying anytime there is a drop. If I want to buy 20 times, this 20 becomes my call limit. That is the total drop. Okay, so 50 call limit. So the 50 call limit simply means I want to buy 50 times anytime the market goes against me with this $80. So the $50 becomes my 50 margin call limit. So when we talk of the call limits, that is the number of times you would like to buy in addition to your position. The number of times I would like to do or to buy this $80. If I want to buy 20 times, $20, 20 times becomes my call limit. So hope you get it. The meaning of the call limit. Hope you get it. Okay. So let me see. Like I said, I'm taking it from top to down. So margin call limit explained. Do I have divide? It's explained. So please explain more on margin configuration settings. Yes, the settings we'll talk about it. Now, if my margin call is off, because I guess I've answered this question, because of my insufficient balance, when would the coin be sold for me when the price rise? Yes, it will. So I guess I've answered that. Now, good morning, sir. Thank you so much for all your cares and time. Please, can you give us setting for futures trading? Example, FBA, how to work it out, and teach us how to get or set TP1 to 4. Again, the margin call. All right. So we will look at that. Okay. Now you have jumped my question. All right. What is the meaning of margin call drops? So I guess I've explained that. To those that I jumped your question, the person was attacking me here. He said I've jumped the question. Okay. So we choose the coin or the robot chooses the coin? Do we choose the coin or the robot chooses the coin? I guess Christopher, you did not join early. You did not join what early, and I started explaining this from the onset. So you choose the coin, and then the bot does the rest of the work for you. So if you joined earlier, you would have got that information very right from the onset. I explained that from the onset. So you choose the coin. That's the reason why I explained ways of getting coins to trade. You choose the coin, you set it up, then the bot, you leave the rest of the work in care of the what of the bot, right? Please, those questions up there that will be the last thing that we will do. So I'm trading on spot. Okay, so Rosie is saying, Rosie Omo is saying, I'm trading on spot. All right, that is fine. Must I be connected throughout to run a trade? Must I be connected throughout to run a trade? I don't get you. You mean must you be online throughout to run a trade? If that's your question, then the answer is no. If that's the question, then the answer is no. So share settings for $100, please. All right. So that one will still have to be on the trade settings configuration issue. So how much is the least amount to trade on futures? In short, can I use $1 in futures? Yes, of course, you can use $1. you can use $1. Okay, so this information is very important. However, the attention span is reducing. 2 hours training is sufficient. 2 hours training okay, all right, thank you. 2 hours training is sufficient. Okay, so now let me handle the last part. So Margaret is running away. She said 2 hours is sufficient. All right. Okay, so let me see. Let's handle the last part. That is, how do we choose the coin? I guess I've answered that. Well, the coin sold. Let me see. So, do I have to divide? There is a question within in the middle. So, how to set up FBA? Blah blah blah. So let's handle that to the issue of margin configuration. All right. So whilst I'm going there, let's go to RoyalQ. So is it Rosie? The answer is no. If the margin call is off, just leave it off. Let it be and let your trade keep running. Your trade will still be sold for you. Hmm? Your trade will still be sold for you without any stress or worries. So just don't worry. Just leave your trade. Now, for instance, this is spot. Okay, this is spot. Now on spot, there are different strategies that you can use to do or to use to trade. So on spot, you can save a strategy, but on futures, unfortunately, you can't save a strategy. Okay, so over here, first let me talk about the spot briefly. Then, so for instance, on spot, you can come here. We have different strategies that I've saved here, and there is a common strategy that I love using that is called the 40% or strategy. And the 40% strategy on the spot trading, I only use 40% of my capital as what as FBA. 40% of my capital as FBA. Then I use 60% of the capital to buy the dip, right? So 40% of my capital as FBA, then I use 60% of the capital to buy the dip. That is on the spot market. Now you can click here on top right corner here, you can click on plus to add a new strategy. You can click on the plus sign to do what? To add a new strategy, right? So that is clear. Now click on margin configuration. Now when we talk of the margin configuration, mostly people make it so complicated, but it's something simple. It's all about two things. Listen, it's all about two things. On the margin configuration, it's all about two things. Now, it's all about two things. Now, you can see margin multiple buy-in ratio, and then also margin call drop. And I've talked about the call drop, right? So, for instance, you see 20% call drop, like I explained to you. It simply means from the first to the last, whatever you get here should sum up to what? 20%. Whatever you get here should sum up to 20%. So if I decide that I will make this place, I'll make it $2. Two. I have to ensure that by the time I add up everything, it should sum up to 20% or 20. Now, if I make this place 1, I make this place 3, I make this place 4, I make this place 6, I make this place 10. I have to make sure that whatever that I do here, it should sum up to 20% or 20, 20. So there is no fixed formula, but it has to be proportional such that you can be able to take control, or it can be able to take control of the market. So over here, mostly the first call, what the first call does is the market sometimes drop very fast. Sometimes it drop very fast. So it's easy to reduce your first, at least the first call, second call, third call, and then fourth call. Reduce it to a lower percentage drop of maybe 0.5 or even 0.2. in order 0.2, maybe 0.4 or 0.3, 0.4, or maybe 1, 2, 3, and then 4, so that it can be buying it at a very fast pace. Now from the fifth call here, you should know that if the more it buys here, the more you'll be able to make profits on the sub sales as well. So you have to propagate it such that your profit arrangement would also align with the call drop, because when the market drops higher and you still exist in the market, that is where you can be able to make more profits, right? So the most important thing, what I'm saying about the call drop, I'm not going to give a fixed formula here because I'm not teaching trade settings. I'm just here to explain things to you to clear your doubts. So the most important thing is I have to make sure that at the end of the day, whatever that I type here, it should sum up to 20%, because that is what the analyst or the signals indicated. Whatever I type here, it should sum up to 20%. Now the next thing is the multiple buy-in ratio. Now the multiple buy-in ratio depends on my capital. If I have $80, it simply means from the first to the last, I have to make sure that whatever I buy here will sum up to $80, because my capital happens to be 100. I use $20. It means I still have $80. So out of the $80, out of the $100, $20 as FBA, $80 to buy this for. I have to make sure that whatever I buy here, it should all sum up to what? To $80. That is what we mean by the multiple buying ratio. This one too, there is no fixed formula. And I've always been saying, as a trader, you need to be creative whilst you keep learning. Because some of you are too smart, or you are smart enough, and you can also think and create something. It's not always the day someone should tell you. Do you get it? Whilst you are becoming a trader, these are some of the things you learn to become creative and innovative. So this one too does not follow a fixed formula. The most important is make sure it can sum up to the capital you have. All right. Now, let me get back to the question of how to set TP. How to set up what? TP. Now, for you to set up take profits, there are two ways. There are two ways. Over here, we have the percentage take profits to be set here. Let me see. We have the percentage TP to be set. We have the percentage take profits to be set here. Okay. All right. So when you come here, this is the percentage take profits. Here is the take profits, whole position take profits ratio. So if I set 1.3%, okay, 1.3%, that is it's expressed in what? In percentages. So let's change 1.3% to a whole number and see what we are expecting to make. Okay, so you can express this 1.3 to a whole number to check the amount of profits or the amount that you are expected to do or to make. Or after setting up the trade, to which I don't have any ongoing trade this morning. So after setting up the trade, you click on what? On stop. You click on stop. That is if you have ongoing trading. You click on stop to enter or to make entry of that take profits. Now mind you cannot enter TP1. Listen, you cannot enter TP1, 2, 3, 4 at the same time. You can only select one. You can only do what? Select one, but you can't select all the 4 at the same time. You can select one of them. So take notice of that. So for instance, maybe you come here. Where is the signal? Very good. You come here, you see a signal given. Let me see. Where is that signal? Okay. So for instance, this particular signal, You observe it here, you can see take profit 1, 2, and then 3. You can't set up all these 3 at the same time, but you can only select one of it. One of them here, you can just select one of it and then set it up. That is all. All right, so let me now get back to see if there are other questions. I guess we've shared a lot here this morning. So let me see, please, are you recording the lesson so that I can watch more? Yes, it's being recorded. Yes, it's being recorded. So someone is saying I can't see anything. Your screen is visible. Yeah. Can you see my screen? Can you see my screen? Let me see. Okay, thank you. All right. So please, okay. Let me see if there are other questions. Please, are you recording? Yeah. Then now that my margin call is off because of insufficient, so I guess I've answered that. So yeah, so I guess so far so good. There are no other questions to ask. And we've spent about 2 hours here. We spent about 2 hours, 30 minutes. 2 hours, 30 minutes here, which is good enough for you. And I believe it has helped enough. So please say, are there hints to becoming a profitable trader? Are there hints to becoming a profitable trader? And the answer is yes. How can I become a profitable trader? How can I become a profitable trader? So I guess you missed the um onset session. Okay, so if you want to become a profitable trader, then you need to be abreast with learning. Learning is the only thing that separates the mature from the amateur. Do you get it? So over here, if you want to become a profitable trader, you don't need to joke with learning more about this technical analysis, fundamental analysis, fundamental analysis, mm, and then sentimental analysis. Then also, let me add this um market psychology. Market psychology. If you want to remain a profitable trader, you don't need to joke with these things. And then also, the last part I'll add to it is risk management. Risk management. If you want to remain a profitable trader, these are the 5 or 6 things: technical, fundamental, sentimental, market psychology, and then also risk management. These are the 5 lessons you need to glance through. You need to study them like your boyfriend or your girlfriend. You need to marry them. You need to kiss them. You need to do whatever you want to do with them. So far as trading is concerned. So far as trading is concerned, and I believe mastering these skills would automatically help you to become a profitable trader. Mm? Would automatically help you to become what? A profitable trader. Mm? So now, where can we get signals from? So yes, we have the signal platform. We have the signal platform that you need to join or ask your upline to add you there. You need to join or ask your upline to do or to add you there. So sir, please, we will be needing someone to come on Zoom to teach us just about certain trade, the arithmetics, how to work on the figures. Yes, so that one every Monday. Yes, so please proceed to ask your question. So that one every Monday morning, okay, we teach about trade settings. Every Monday, we teach about trade settings, and I'll urge you get time to join the Monday sessions. The lessons are many, right? The lessons are many, and we cannot learn all things in a day. So we have each day and the session we handle. So please try your best enough to follow that timetable, and it will help you. Okay, all right. So thank you, Grace. So the recorded version are all uploaded on our RoyalQ Evolution page. So please subscribe and hit the notification button to notify whenever we upload the recording for a recap. Yes, that is very, very important. So please, it's not all the coins that are available on the Bybit platform. Please, what can we do if the coins is not in RoyalQ? All right, so you can only trade coins that are available in RoyalQ. You can't trade coins that are not available in RoyalQ, right? So if the coin is not available in RoyalQ, it simply means it's not meant for you, right? You can't trade on it. That is it. Now, the next thing is if a coin is also not, sometimes the signal may be given based on coin that exists in RoyalQ. We don't give coins that does not exist outside RoyalQ in terms of signals. So you have to, if you have to do anything, you have to take your time, go through all those things. If not, if the signal is given, go and check if it's available in your site. If it's not there, then ignore it, right? Then ignore it. Okay, so let me see. Um, I'll answer this question. Take your time. Okay, now, please, it's not all okay. I guess I've answered that. All right, let me see. So, sir, please, we will need. All right, so I guess I've answered that too. Then, please, how many margin call limits can I use if I'm to use $10 and my capital is $20 and my capital is $26? How many margin calls? How many margin calls? So if you are using $10 as your first buying amount, it simply means automatically you can open up to 4 margin calls in addition. 4 margin calls in addition. Yeah. Or if you are using $5 as your first buying amount, automatically you are using 5 margin calls, which minimum call will be maybe $5 on the spot market, right? Yeah. Or on the futures market. So, all right, God bless you too. So in spot trading in RoyalQ, let me see. In spot trading in RoyalQ, when the market is falling or going down more, the dollars in the exchange like Binance may my dollars also decrease or taken in P&L. Why? Yes, of course, because you are owning the assets. Listen, you own the assets. Oh, where is the distance? Okay. Now, when the price is dropping, in spot trading, when the price is dropping, your actual funds or your portfolio in your futures account, sorry, in your account also decreases. It does what? It decreases. It decreases. Now, the reason why it decreases is simple. It's because you own the assets with your money. You bought it with your money, right? You own the assets. So whatever happens to the asset, that is, it goes according to your capital. It's for you. It's money that you use to buy the assets. So if the asset goes up, your money will also go up. If it goes down, your money will also go down. But nothing will happen. There is no way your funds can get to zero. There is no way your account can get to zero, but it can go down very well. Even about 90% of it can go down. But when the market rises, it will rise back. So that is something common you need to take notice of. All right. Let me see. Yes. Yes. So um my leader, can you please suggest how and where one can get and study this fundamental technical analysis etc you mentioned? Yes, we've been teaching all here. So subscribe to our YouTube channel All our lessons are there. That is RoyalQ Revolution. All our lessons are there. Okay, so I mean aside our usual RoyalQ trainings. Well, that one may be your personal concern. Maybe if you still have more lessons or you still know other experts who can teach you, that is fine. But then, personally, what we can do to assist is what we are doing. We teach about technical analysis. And whoever that has joined our classes for many years is well abreast in analyzing signals himself. So I'll also advise you, there is no other way you can get all these opportunities for free. There is no other way you can get these opportunities for free, especially learning about technical analysis, fundamental analysis, and others. There is no way you can get it for free. But you sign up RoyalQ to make money, and we are using this opportunity to train you for you to become professional. Do you get it? We are using this opportunity to train you for you to become professional. So unless maybe the education that we are giving is not enough, that is when you might inquire for that. But if not, go to YouTube, watch those same tutorials, and you can make decisions, analyze the market perfectly on that. All my students or our students uses RoyalQ knowledge. When we say RoyalQ knowledge, it is not something peculiar or something so distinct, but then it is that knowledge about technical analysis. Now, RoyalQ as a boss does not teaches technical analysis. We the experts that teaches technical analysis, right? So that is what you need to know. All right, please, I need the RoyalQ Revolution WhatsApp group. All right, so I guess the Angel will share that with you soon before we leave. Then on Bybit, you can't get all the coins unless you have Binance or HTX. All right, so thank you. Now, please, why did someone say that it is better to use cross margin instead of isolation in futures? Why did someone said it is better to use cross margin instead of isolation in futures? All right. Now, we are going to spend 3 hours here. Oh my goodness. Now, when we talk of cross margin and isolated margin, there is nothing like one is better than the other, okay? But it's about the explanation. There is nothing like one is better than the other. When you talk of cross margin, the work of cross margin is different from the work of isolated margin. That does not mean that one is better than the other. With cross margin, now, cross margin help in trade sustenance. Sustenance. When I talk of sustenance, for instance, if I have two trades in the market, two trades, maybe Solana and then also ton, okay? Solana and then ton. Now, what happens is that if I have $50 that I'm using to trade, maybe 20 on ton, 20 on this, all the money that I'm using is shared among these two trades to trade. Now, the disadvantage is that once Solana is going to be liquidated, ton 2 will be liquidated in addition. That is for cross margin. When Solana is going to be liquidated, ton 2 will be liquidated in addition. Now, we have isolated margin. With isolated margin, if I am trading Solana, $20 on Solana, this $20 is for only Solana, $20 is for only ton, which simply means if ton is going to be liquidated, ton will be the only trade to be liquidated. But on cross margin, when it comes to sustenance, because these two trades are trading on the same direction or are all trading at the same moment, now the capital will be more utilized here. That does not mean that isolated wouldn't utilize the capital. It will utilize. But in the case of liquidation, only this $10, this ton that will be liquidated, not Solana and ton. But on cross, it is both trade that will be liquidated, even though it is Solana that want to be liquidated, but it also liquidates ton. And on cross, if I have any funds in my futures account, all the funds will be liquidated in addition. That is the difference. So mind you, all these sessions, whatever we are doing, we've added up or we've summed up everything just for beginners to clear doubts and then also learn more. But we have one-on-one sections. We have session for futures trading, session for trade settings, session for all those ones. So take notice of. Please, why did someone say that? Okay, so what do risk type, radical, conservative, and steady means? In strategy mode settings, what do whole warehouse, sub-in mode, and then sub-in real-time settlement? Okay, so I think she came in late. because you explained. Yeah. So I guess most of these questions that I've explained them. So reward to get more understanding. Share us with the YouTube link. So please share. All right. So thank a lot, Mr. Emmanuel, for such incredible explanations. You answered as well. So to other mentors, please. So as to other mentors, so please explain to us well when we ask questions rather than telling us to go. My goodness, to go to YouTube and listen to recorded lessons. All right. So my dear, you see, this session has taken over for 2 hours 45 minutes. Okay. So tell me, assuming you are a teacher or a tutor, okay, teaching. Now, the same lesson you started and you are about to end, someone asks the same question that you started as introduction. How will you answer the person? Hmm? How will you answer the person? Share with me how you answer the person. You see, this is a collaborative class, a class that will join students and tutors or beginners together to ensure they can also learn and then have good experience and understanding about trading. Notwithstanding, we cannot deny the fact that the recorded versions are meant for latecomers, those who couldn't attend. So if it happens that you couldn't grab all the information and you still need more information, you take your time to watch the YouTube channel or the YouTube videos so that it can do what it can help you, right? So I believe Dilali or something, your name is email. So please get me clear, right? All right. So let me see. The last thing that I'll talk about is radical, conservative, steady, and then now those strategies are there based on capital aversion. Okay, capital aversion. So for instance, when we talk of radical, well, actually, when we say someone a strategy is radical or a risk type is radical, that simply means that strategy is exposed to someone who can risk very high. Okay, that is the meaning of radical. Someone who can risk very high, which simply means you can expose more or you can risk more of your funds to the system. When you say someone is conservative, that is that person, he is in between taking huge risk and taking less risk. He takes in between, so that is medium or mid, right? And then also you have steady. That person is so fearful of taking risk. So when it comes to exposing of capital to the market, he has his own style of exposing capital to the market so that they wouldn't feel the fear or having the fear of losing all. So that is the difference between radical, conservative, and then also steady. Then with whole warehouse mode, to briefly explain that, because all these sessions we will handle them on Monday on trade settings. So whole warehouse mode buy asset from the first call to the fourth call and it sells them together um in pack as the term itself goes, whole warehouse. So it's buy them and then it buy and sell everything in whole. All right, then the sub-in mode, with the sub-in mode, it's buy asset from the fifth call to infinity, fifth call to infinity, and then also the real-time settlement also buy assets from the fifth call to infinity. But the difference between sub-in and real-time settlement is that the real-time settlement, when it buy the assets, it sells the assets, that is the sub cells. It buy and sell them to generate the profits to the trader. But the sub-in mode real time, with the sub-in mode, it distributes the profits to the market so that it can help draw your average price closer to the current price. It can help draw your average price closer to the current price. What is rational behind you use 40 FBA in spots and 60% for margin calls? Yes, now it's simple. Let me see. It's simple. The reason is simple because I don't want to be too greedy, especially when market is bullish. Now, when market is bullish, greed sentiment appears in the market. Wherefore, most traders begin to feel or have that feeling of exposing all their capital to the markets. So, assuming I have $100, $100. Now, I entered with just $10 and it didn't even take up to 20 minutes and it sold. Didn't take up to 20 minutes. So then this $10 gets sold out of the market. I go into the market with $20, less than 30 minutes or less than 24 hours, the trade is sold. Now, how will I feel? I'll begin to feel, oh, the market is good. Let me add all the capital. So that is where greed enters. So someone will begin to say, this thing, if I knew it would be sold so early like this, I would have traded with all the $100. So that is where greed enters into the system. So with this strategy, at least even if I go in the market with $40, it's enough. I'll make good profits. And if the market also goes against me, I can use 60% of the capital to control the dip. Do you get it? So I want to control greed and also control profit at the same time. So you see, 40% is good in the market. The profit will be satisfactory. Do you get it? The profit will be what will be satisfactory. So they are all trading strategies. So you ask of the rationale behind. So that's just by the way. All right. Okay, so I believe we'll end here. Right? I believe we will end here. If God permits. Mind you, Friday itself is question and answer session. This is just to help beginners. Learn, be abreast with the system, understand trading, and then also learn more, have more skills, hands-on skills, what practical lessons. So that is the reason why we brought this session, to ensure that traders can be able to be clear their doubts. Even when it comes to few things on trading, they might be able to understand and know their left and right so far as trading is concerned. But when it comes to typical questions and answer sessions, that is Friday. Q&A sessions is on Friday, where you ask question, we answer you. You ask question, we do what? We give you an answer. But this lesson is to be more specific in helping guide traders from A to Z about trading, knowledge about trading, skills about trading, and then also how you can navigate your way out so far as trading is concerned. So, guys, I believe we spent enough time here. 2 hours, 47 minutes is enough for us. And if God permits, we shall still meet again another time. If God permits, we shall still meet again another time. So let's end here. And as we are ending, I would also use this opportunity to advise. Now, listen, RoyalQ is here for everyone. In as much as it's here for everyone, someone introduced you to RoyalQ. So, make it a due diligence to ask the person more help, because you are here because of that person. The person brought you here, and the person needs to help you grow. Now, in a case where that person is not capable of taking such responsibilities, the person may surely have an upline or someone who brought him or her. Listen, you are a beginner. That's the reason why I'm giving you this tip. I'm giving you this tip because you are a beginner. Listen, the person who brought you, it is his responsibility to guide you to grow. Notwithstanding, if that person is not helping you, make sure that you see the person's upline. Now, it's just like your mother. You are a daughter to your mom, right? Your mother is also having a grandma. Now, if your mother refuses to take her responsibility, your grandma is supposed to take that responsibility. You need to tackle her for that. If it happens your grandma also refuses, then make it a due diligence to get someone who will take your personal life responsibility. So that is where in real life people begin to run away for boyfriends and girlfriends or lovers who will support them, even though that is not the actual deal and that is not how it's supposed to be. So in this case, if your upline is not helping you, make sure you get your grand upline. Search for him, let him help you. If your grand upline is not helping you, RoyalQ provide what you call mentorship. Now, with the mentorship, this is how it works. Go for someone who you think can be available, who you think can help you. When you need assistance, that person can be able to assist you as needed for you to grow. Communicate with that person. Just don't go and seek any assistance elsewhere. Communicate with that person. I'm giving you a tip as a beginner. Communicate with that person. Oh, maybe so and so person, I've come to your DM for assistance. I would like for you to be maybe my mentor. Tell him the reason why you want him to be your mentor, not just because you need help. But my upline is not showing up. Me, when you get into my DM, you tell me you want to be my mentor. I'll tell you no, because I know you have an upline and I don't need your mentorship for anything. Me myself, I'm too busy. But I'm going to adjust that little time for you. Before I adjust that little time for you, not because I want to adjust, but because someone is not taking his responsibility well. So make sure you go there, you tell the person, my upline is not helping me. This and these are the reasons. So I need mentor. And I've realized you can help me, so help me. Now, this one will help you. It will help you. Don't just go. You see, people take advantage over beginners in trading. If you're a beginner, people will take advantage over you. If care is not taken, they will scam you. Be careful of scammers. They are real in crypto because it is easy to scam someone in crypto. So they will scam you. So take your time. Don't just be following people. Everyone you jump into the person's DM, you'll be asking questions. People should help you. The person will help you, end up scamming you. So take your time, work with your upline or your grand upline, or sign up a mentorship. Doesn't You don't pay anything for that. The person will just have to add you up. If he qualifies to be a mentor on RoyalQ, the person will ask you to be part of his mentorship group on RoyalQ. They will add you there. Then from there, they will start working with you gradually. So please take notice of all these things. They are real in trading, and if not, you might always end up falling victim. A lot of people DM me of how they've been scammed. Someone just jumped into the DM because they needed assistance and the person scammed them. All these are important information you need to know as a beginner. If no one is telling you, then I am telling you. Get to know all these things because they are important. If not, you might end up being scammed and all your dreams that you aspire to achieve in this trading journey will be in vain. Once you are growing, listen, once you are growing, understand also that growth takes time. Growth takes time. You wouldn't just become a pro trader today. You wouldn't just become a pro trader today. Take notice of that. It is a gradual process. It is what? A gradual process. Value the little results you get. Don't be envious of someone's results, leading you to make a hasty decision. Never do that. Exercise patience, grow, humble yourself, learn, and follow the cycle. Repeat learning, trade, make profits. Take your time when you face challenges. Don't be too hard on yourself. Take it easy and then grow with time. And definitely become a profitable trader. And one day you look back and tell yourself, I started this journey. It wasn't easy, but today I am glad I have been here by God's grace. I believe this is good. This will help you. This will build you up. This will cheer you up. And it will ensure one day you will congratulate yourself to tell yourself, indeed, I've fought the good fight. Have fought the good fight. Yeah, it is not going to be easy, but keep growing, keep learning, join all the necessary meetings you are supposed to join, ask questions from leaders who can assist you. Make sure you are growing every day. Make sure you are learning every day. Do not sit idle a day without learning. Do not sit idle a day without what? Without learning. And I believe you can grow in this industry. If you can learn how to grow very well, you will grow. All right, ladies and gentlemen, this is where we will end this morning session. At least you've shared 3 hours here. And I believe this 3 hour session is going to be more impactful in your trading journey as we all start or continue to trade and become profitable traders and then also professional traders with time. God should be with us. God should strengthen us so that we can also grow to become good traders and also profitable traders with time. God bless you for being here this morning. And I wish you all the best. Mind you, today is OMC meeting, and we are still expecting the market is going to be volatile. If the market becomes positive, very good, it will be bullish. If the news becomes negative, the market will be bearish. It's a response to it. So take your time to trade. Don't make a hasty decision. Exercise patience. After the news, you can make your trading decision. I wish you all the best and have a good day. Love you all. Bye, 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 bye. All right. Yeah, they said 2 p.m. ET. 2 p.m. ET. So I actually don't know, but you can check it online. Yeah. All right. So we'll end here. Let me end the session. So I'm signing out. I'm signing out. So you to sign out and go. God bless you too.